Hello traders and welcome to another video review. Today is Tuesday, December 23rd, 2025. Let's take a look what do we have in the economic calendar for today. RBA meeting minutes were released overnight, otherwise non-event Asian session. And London session looks like a non-event as well, so minor data releases like Spanish GDP and unemployment rate from Poland. Much more important seems to be the US session. We start with GDP data release and GDP price index together with the core durable goods orders and durable goods orders. We adding building permits and housing starts together with the core PCE price index, PCE price index and personal spending. And this is scheduled for release at 2:30. 1 minute later we got Canadian GDP. At 3:15, industrial production data from the US are scheduled for release. Then we have CB consumer confidence scheduled for release at 4 o'clock together with the global daily trade price index from New Zealand. Atlanta Fed GDP now data are scheduled for release at 5:30. At 7 o'clock we had 5-year note auction. 2 minutes past 9 we got new home sales data release from the US, and that's about it. And API weekly crude oil stock is scheduled for release at 10:30. So very busy US session. So without any further ado, let's switch to the charts. We start with euro dollar. Euro dollar bounced from the trend line and is moving higher with quite strong momentum located at 66 points right now. The bulls are testing 1.1781 level as we approach the last week high at 1.1805. So this trend line seems to be one of the most popular technical tool these days. It looks like the market recognize this trend line. It recognized the 100 periods moving average as well. So in that situation, we should continue with our scenario. Bearish divergence is done. ABC to the downside is done. 5-wave movement to the upside is done. Now it's time to increase the movement to the upside. 1.1805 is the next target. Then the other target is 1.1818, and then it's 1.1850. Cable keeps moving higher as well. So we broke above the swing high from the December 16th. Local high was made at 1.3498, almost 1.35, but we hit the extremely overbought conditions. Next target 1.3523, so that would be the target for the bulls. And with this momentum, it won't be really a problem to hit this target. We can remove our trend line, and what we can see here is very specific for this pair. So I'm going to mark the technical movement to the downside, right? So this is the one and this one, so this minus 0.72, right? One correction. The second correction was minus 0.78. Okay, now the third correction was this one was 0.71. Nice. Then the next correction was 1.08. That's the biggest correction. And the last one maybe this one 0.66. So one more maybe, because I want to see something that might be, there you go, 0.70 is here. 0.70, 0.72, 0.73, 0.71, minus 1.8, minus 0.66. So now if we want to find where is the top for the market, we need to go below minus 1.10. And if there is a movement to the downside towards this level, then this situation is clear, and we have the top for the local top, of course, temporary top for the cable. So right now we just measure the correction. US dollar versus the Japanese yen reverses from the 157.57 just below the swing high, and we are back inside the channel, and we are almost hitting the 100 periods moving average located at 155.76. During the up move, we hit the extremely overbought conditions, and then there is sharp decline in 5 ways. Even you can see it even on the momentum. So that's the impulsive reversal to the downside, and it looks like this situation is getting way worse for the for the US dollar, which is why we are going to take a look at the US dollar index. And the US dollar index again hit the trend line, went inside our zone here, supply zone. You can see it here, located between 98 and 53, 98.73, and then reversed lower straight on, and now it is approaching the swing low from the December 16th, 97.84. So now it is inside the demand zone. And let me just apply the rectangle here, so we know what's going on. So that's the rectangle, and this is how it looks like on the 4-hour time frame chart. So this is the demand zone, right? So there you go. Very narrow zone to the upside, supply zone. Very narrow zone to the downside. Demand zone, negative momentum, 33 points only. So the situation is quite obvious for the US dollar. This is why euro dollar, British pound is up, US dollar versus the Japanese yen is down. What is going on with gold? Let's take a look. There you go, new all-time high on gold because of the dollar weakness across the board. 4,497. This level here will now act as the technical support, so that's nothing new here. And we hit extremely overbought conditions, 81 points right now, so please prepare for some sort of the pullback soon. Where are we heading? We are heading towards 4,500. Let me just place this level on the chart. There you go. So we are heading towards this level, obviously. Why? Because it's the nearest round number. So this is the temporary target for the gold bulls, gold bugs. And right now there is absolutely no indication that this uptrend is about to complete or terminate. Let's take a look at the daily. Daily is at the extremely overbought conditions again, right? So that might be something. Nevertheless, I guess that the movement to the downside will be in form of the pullback, and it will be only temporary. And the Bitcoin hit the lower channel line, tried to break above the 100 periods moving average. It did. Tried to break back inside the channel, and it failed. What do we see here is a classical reversal situation. We got shooting star-ish pin bar at the top of the move, confirmation, extension to the downside, back down to this temporary technical support levels, then bounce from this zone, confirmation to the downside, and extension down towards, we go 86,845. So as you can see, bulls don't have easy life these days. And as we said before, right now the Bitcoin might be moving inside of this very specific zone. One zone is to the upside, and it's just below the the trend line, and basically below the trend channel. So this is the zone. This is the negative zone, or as you can see, this is the supply zone, and obviously you can see the demand zone, which is located below, and I will just mark it green obviously, and you can see that in that situation the downside is limited as well, right? So we got this zone here located. So most likely the situation looks like this. We are going to move up and down inside of these two zones, and dips should be bought, highs should be sold until we will move either above or below one of these zones, and we need a fundamental trigger to do this. In the back, obviously, we got this consolidation-ish movement, but on a daily time frame chart, we can have the downswing. As you can see, it's from here to here. Major technical resistance around 98,000. 100 periods moving average is getting closer to this level as well. Volatility is low on a daily time frame chart. Momentum is negative. Bears are in charge of the market, so please please expect the bearish pressure to intensify on lower time frames. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.